Good afternoon, everyone, and welcome to Stock Market Today. Ali Corum and Ed Carson here with a breakdown of the trading action in the final session of 2021. Ed, we made it. Another year in the books and a relatively quiet session to cap off this holiday week. But we did end today with some declines on the major indexes.
We ended with some declines, but that can allow some stocks to form handles. And speaking of which, Tesla and Datadog, at least on a weekly basis, now have handles going into 2022. And AMD is also sort of carving some similar type of fashion.
Okay, great. We will check in on those charts and also analyze the major indexes. So here's a look at the Nasdaq Composite, which finished Friday down about 0.6%. The S&P 500 down 0.25%. The Dow down almost 0.2%. The Russell 2000 up about 0.25%. So even with the Nasdaq's decline today, it's still holding above the 50-day line. And as you said, I mean, this is the kind of pullback that we like to see for stocks that we're interested in after they make explosive moves.
Yeah, exactly. Because it's like if this had raced up straight up to new highs, it'd look a little strange. And honestly, doing that in the last week of the year, you would have seen a lot of stocks breaking out of sort of not great looking basis, and you would have either had to chase them, buy them, in a low volume, weird environment,
right,
or let them run by. And so either way, so this is a situation now we're going to see, and we're going to look at some stocks that may set up. And then in 22, as the big institutions come back and as volume comes back, we'll either have tax selling or not. And then when we have breakouts or moves past entries, that'll be more positive. And if it doesn't work out and things sell off, well, then you didn't get into these things. And so this is probably an ideal situation really to end the year.
Yeah, and when more trading volume comes back into the market in the new year, that'll be very telling in terms of how healthy this rally is. And let's also take a look at the weekly chart as well. So yeah, finishing right around that 10-week line after a big upside reversal in the Christmas week. But all in all, it seems like we're in a position right now where stocks are hopefully building bases. So there should be, you would think, a lot of names for the watch list. What do you think? Is there a lot out there that's looking like it could soon be actionable, or is breadth still an issue?
Well, there seems to be breadth in the market for leadership. There's a lot of stocks that are setting up or close to setting up. Like you could just imagine, just a couple good days and all of a sudden they'd be getting into range. The market breadth is still a problem. If when we'll look at the Russell at some point or IWM, and just that, I think, I'm not sure if that rose or fell today. It may have, but ultimately,
Up
I
about
think
0.25%
for the week, yeah. And so I think it kept on hitting resistance at the 200-day line or the 40-week line, and that's just an area. So it rose, and it rose from the prior week, and so yeah, it did decline a little bit at the end of the day. Keeps on hitting there, and just want to see that that's sort of a proxy for market breadth, and you'd like to see that pushing higher. So it's not just a few mega caps and a few dozen other stocks, but really want to see the whole a broad amount of the market participating. That was an issue throughout 2021. So would like to see more breadth in 2022.
Yeah, and let's also check in on the S&P 500 as well. So holding pretty tight near highs here. Looks like maybe a little resistance at that 4,800 level, but again, a pretty big move in the prior week.
Yeah, and the S&P led the way in 2021. It was up about 27%. I think that's where it was as of yesterday, and tacked on a tiny portion maybe today, or fell just a little bit. The Nasdaq came in a little bit below that, and that was led by the mega caps as well. So definitely a mega cap rally. The big caps doing well. So if you could, either buy one of these indexes, or just if you could buy some of these mega caps or buy into things early, the market did rise. It was a pretty good year. At the end of the day, it was just a little choppy getting there.
Yeah, a windy road to get there. And let's also take a look at the Dow's performance. So it's in new high territory as well this week, or at least right back around its highs from early November.
Yeah, I mean, the relative strength line shows that it's still sort of been lagging. So it was the weakest of the big cap index, is still better than the Russell. But you can see that this is, and this is not a real surprise. It's been
Right.
lagging for quite a while. And some of the things that were doing well would be things like Apple and Microsoft. So things that were driving the S&P and Nasdaq even more.
And okay, well, before we take a look at the stocks that we're going to highlight, Ed, I guess let's talk a little bit more about the trading action that we saw in 2020. Like you said, it was a bumpy road to get to where we ended up, but a lot of rotations underneath the surface and a really tough market for stock pickers.
Yeah, I mean, because again, the indexes were driven by these handful of names. So looking at, say, the Nasdaq, and just sort of there was some choppy action. It started the year off, just kept on going. We had that post-election rally, and it kept going for a while. But then things got choppy for a while, and there were some head fakes. And this is not messing. There were some really big moves, and then there'd be rotations into, say, steel, or rotations into energy, and then it would switch after a couple of weeks. So it was very hard to know when to get in, when to get out. As I say, like a rally is sort of like a loaf of bread. I mean, the heels are not that much fun. The end isn't any good. The beginning you sort of wait on, and then the end, is not fun. It's almost, you're not going to sell right at the top. And so you want as big of a loaf as you can. And there were some pretty small loaves of bread for rallies at time this year. It kept going up, but it was you had to be nimble and had to know to scale out pretty quickly when those things happened.
Yeah, exactly. When we saw that mid-October follow through day, those next couple of weeks were really great. But then you had the late November turbulence as well. So, uh, what do you think is the biggest lesson then for investors to take into 2022 with them, with all of those rotations that we've had underneath the surface? I think that kind of made us rely more on, okay, what are the industry group rankings like? Not only what are the top groups, but what are the groups that are improving their rank, that may be setting up and could be the next ones to take the lead? Early entries, taking profits quickly, because as you said, by the time we saw a lot of stocks breaking out, then the money would be flowing to other groups.
I mean, maybe those trends will continue, maybe they won't. So you just have to adapt for that. I mean, as I was thinking about it, there's not necessarily one way to have played 2021, because we had Charles Harris, just a great trader. And he just basically, a lot of what he did is he just held Tesla. And we'll talk about Tesla. And heck, that was a pretty good move. And it would have been a tough move for a while, but he had big gains. And he did that with some other things. But he held stocks with conviction. Then you had the opposite way. You have Mark Minervini, who would do some almost swing trades.
Yeah, very quick profits. Yeah,
very quick
selling
profits.
half in a day to a couple of days. Yep.
And then David Ryan, another great CAN-SLIM. These are all CAN-SLIM traders, growth investors, but he was often going into areas that weren't in growth. And he was really focusing on the sector rotation and looking at steel and fertilizers, funeral homes, not the kind of things that we often talk about, but he was finding the sector moves and trying to get into them early. So lots of different ways of doing it. You have to find the style that works for you. I mean, Charles probably wouldn't have liked doing what Mark Minervini did. That just wasn't have been him, and vice versa. And they're both phenomenal traders, and so is David Ryan. So you have to find your own rules, and also know that they're going to adapt for the next year. It may be a very different year, so you can't just assume that I've got to do this and this and this because that's what worked in 2021.
Such a great point there, Ed. And then there were other traders on the staff who looked at those IPOs and found some good entry points there.
Yeah, well, there were some and some did not. And there's a lot of IPOs that had nice rallies and then they flopped. And so everything is tricky. I know you made some great trades and you were in a lot of the really smart strategies of buying, UPRO and buying some of these mega caps that were the big winners and steady winners, really. I know I did relatively well. I beat the indexes this time, but that wasn't a given. It's just something, it was a tough year. It was a tough year.
It
so
was.
it,
Yeah,
but
yeah. I mean, and I got shaken out of a lot, New core, that was a good trade a couple of times, but round tripped it and things like that. And yeah, thought that maybe Square and PayPal would come back to life, and that definitely didn't work out. So yeah, of course I can talk about all my great trades. But anyway, let let's start talking about Tesla now. This is not a stock that either of us are in, Ed, but it's at a critical crossroads.
Yeah, I mean, it ran up. I mean, it rebounded from the top of its base. It round tripped. I mean, that was a pretty strong sell signal, but that's also a place where it could find support. And that's what it did. I mean, that's where it did. Had a really powerful rebound. And then there's basically, it came right up to a trend line that we can draw there. And that's where it basically hit resistance over these days. And that's perfectly fine. And now it's drifted down. I think technically it closed just below its 50-day line, but that's fine. I mean, it's one day away from a handle on a daily chart. And yeah, that is above the midpoint. And on a weekly chart, it doesn't look the most impressive because it's barely there, but that technically is a handle, because it is down and the daily action is there. And, there's probably going to be news by, Monday morning about its Q4 deliveries. And so that could be a catalyst to see it break out or not, but, it's set up. So if things move, it's a good opportunity for it.
So one on our watch list for early next week with that potential catalyst there. And then we've also pointed out how Datadog DDOG is a standout in the enterprise software group. So a potential trend line that has been trying to poke above here as it's trying to tighten up right around its own 50-day.
Yeah, I think it did break. I mean, it depends on this one. It's not as clean as Tesla, but it had a trend line and it broke above that. And there's a few others, and it's basically held above that. So you could have used that as an early entry and you wouldn't be making any headway, but it hasn't undercut that. It's found support at the 50-day line, but then it hit resistance at this short-term area. And now, that's one day away from a handle on a daily chart, but it has a handle now on a weekly. It's just, again, if the market had continued rallying, it would have sort of been up there and it would have been sort of an odd place for it. It wouldn't have been technically great. And so now if it clears that area, that would be a nice, in strong volume, that's a pretty strong buy point. That's a legitimate buy point there and not all the way to the high. So yeah, is it a lone wolf? Maybe not quite, but it's a little bit further away from the pack of other software names for sure.
Yes, it is. And let's also talk about the setup in AMD. Last week, semiconductor sector stocks definitely were in the spotlight, and AMD, NVIDIA among them. So pulling back this week, and yet again, we still have AMD here above its 50-day line, but a good thing to see this handle or this pullback take shape.
Yeah, I mean, that could be another, this consolidation is a little short. It would probably need another week or so before it became a base. So even if it forms a handle, we wouldn't traditionally call it a handle. Whether or not that would be the entry point or just buying it off the 50-day line. I mean, this is a tough one because this is almost like a little microcosm of 2021. Big volatile moves that scare you, but it ends up higher. I mean, it could come back to its 10-day line, 50-day line, but be 10 points higher, and so if you sat through it, oh, you're fine. It'd be easy. Okay, no problem. But there are some big moves in there. So it'd be nice if this could settle down. Be nice if a lot of stocks could settle down and make it a little calmer. I don't know if the market's going to do that for us, but yeah, it'll be, this one has tremendous growth. There's a lot of great opportunities still with this one. See if it can make another run in 2022. It may not.
Okay, well, there are just a couple of watch list stocks for everyone heading into 2022. So I guess to cap things off, Ed, what should investors be doing to prepare for the week ahead other than taking a break and celebrating to ring in the new year, I think.
That's right. And probably everybody's staying in their homes, or maybe some people venture out. Look, you want to go back and take some lessons as we talked about. Look at your good trades, and look at your bad trades, see how you can, improve upon it, but also just sort of try to stay fresh. Actually taking a break is not the worst thing too. And start off with 2022, whether or not you're all in cash or significantly invested, just sort of think of it as a new slate. Okay, you made your gains, your losses, or what have you. Just focus on trying to make 2022 work well. Don't try to make up for or try to live up to last year. Every market is its own thing, and it's just easier to do that mentally if you just go in there fresh. This is all new. You're at zero.
That's right. Okay, Ed. Well, once again, another year in the books. And I think we are personally ready to go for another year, always looking to approach things with optimism and that cup with handle half full attitude. And so we'll get ready to attack a new year coming up next week. And Happy New Year, Ed, and Happy New Year to everyone out there.
Happy New Year.
All right. Thanks, everyone. We'll see you back here next week.